Warren Buffett, also known as the Oracle of Omaha, is one of the most successful investors in history and is worth over 100 billion US dollars. And because he's so successful, he is one of those people that you should absolutely listen to if you want to get into investing. He is one of those people who has made it from basically nothing all the way into becoming a billionaire that is worth hundreds of billions of dollars. Today, I'm going to be sharing with you some of Warren Buffett's tips and tricks and some guidelines that he recommends for small-time investors in order to be successful. Let's take a look. How's it going, guys? Ryan here and welcome back to another investing video. Today we are talking about Warren Buffett, one of the most successful investors of our time, worth over 100 billion US dollars. But more specifically today, we're talking some of his guidelines to becoming a successful investor. And these guidelines apply to any type of investor, whether you're just starting out, whether you've never invested before, or whether you are an advanced investor and have been doing it for a long time. These tips, tricks, and guidelines can certainly help you out in the long run when it comes to profitability. So without further ado, let's get straight into it. Kicking it off with number one, Warren Buffett recommends that investors invest for the long term. In fact, he once famously said his favorite holding period is forever. And that basically means he thinks you can get the best returns if you hold onto stocks long term and you're investing in stocks for the long term returns. What you tend to see is obviously over time a compounding effect occur. Not only do you typically see a growth in the value of the stocks themselves, you also start to see compounding returns from things such as dividends. Now this is obviously fantastic, but it's worth also noting that things like inflation as well will result in the value of these companies going up. As a result, investing for the long term and holding on for forever can often net some pretty fantastic results, especially if you are looking for those dividends and just getting the payouts from them and using them to reinvest, or alternatively taking them out as profits. The second recommendation that Warren Buffett has is buy quality companies at reasonable prices. These are companies which have strong competitive advantages, of course have a strong outlook for future growth and revenue, and have proven to be quality companies in the past, but maybe due to the fact that we have seen a bit of a regression in the market, the prices are now reasonable. Now Warren Buffett calls these types of stocks economic moats, and they are certainly something that you should keep your eye on. You can often catch a really good bargain when the markets are down, and you can look for those companies with strong management teams, strong competitive advantages, and of course strong revenue outlooks as well to be ideal investment opportunities for you. The third recommendation that Warren Buffett has is ignore the market noise and focus on company fundamentals. And this is something I really like to emphasize in a lot of my videos. The fundamentals at the end of the day of the company are really going to be key. Are you investing in a company that can withstand hard times? Are you investing in a company which has proven that they do have a strong track record and are expected to grow? Are you investing in a company that has a management team which has proven themselves previously to build successful projects and companies? These are the sort of fundamentals you really want to look for when you are investing in a company. What the market does is not relevant. And the reason I say that is because at the end of the day, the company is going to be progressing. Basically, the way Warren Buffett put it is this. In the short term, the market is a voting machine, but in the long term, the market is a weighing machine. So what does this mean? Well, simply put, it means that the true value of a company will reveal itself over time, and the market fluctuations that occur, which could affect the share price of a company, are not a true reflection of where the company is necessarily currently at. Coming in at recommendation number 4, and it is the simplest, but in my opinion, one of the hardest things to do, and that is to have patience. And this is something Warren Buffett is really known for. He's known for his disciplined investing and just waiting for those right opportunities, because at the end of the day, the right opportunities are going to come along. So don't go necessarily hunting for them, and if you've got money burning a hole in your pocket, don't just buy stocks for the sake of buying stocks. And this is a big mistake a lot of people make. I myself have been burnt by this methodology, and the fact that I didn't have patience resulted in me losing money. As well as that, if you've invested in a company that does have those strong fundamentals that we've been talking about, and you aren't patient and you sell out too early, you possibly miss out on some really big potential gains if the company is as strong as you think it is. He did once famously say that the market is a mechanism from transferring money from the impatient to the patient. And what that means is impatient people are going to be consistently buying and selling, and it's really the people who sit, wait, buy and hold for extended periods of time that are going to be fruitful and rewarded at the end of this period. Coming in at tip number 5, and that is to be contrarian as an investor. So what does that mean? Well, in layman's terms, it means just don't follow the herd. You can find some absolutely fantastic bargains if you don't follow the herd. So for instance, if people are fearful, the market's dropping and people are selling out of their stocks because they are scared and just want to hold on to cash, this is an opportunity for you as an investor to potentially pick up some bargains. Alternatively, you can look at upcoming industries that other people aren't really focusing on. So for instance, right now, one of the industries that is really hot is lithium. Now, what is the next big thing when it comes to electric vehicles, for instance? Have a look at some other things outside of the lithium space, and you may be able to find some bargains in that sort of area. As a result, being contrarian can really affect your profitability over an extended period of time, because if you're that one step ahead of the game and you're not following the herd, you're not going to be making the same mistakes as them, and you're going to be profitable in your own right. Coming in with our final tip, number 6, and that is to keep it simple. Warren Buffett once famously said that investing is not rocket science. Investing in the stock market is not a game where the person with the 160 IQ beats the person with 130 IQ. What it really comes down to is investing in what you know, not getting wrapped up in complex investing strategies or trading strategies, for example, and taking everything for what it is. If a company is clearly losing money and aren't projecting to make more profit moving forward, then quite simply, the value of that stock is going to continue to drop. Alternatively, if you look at a company which has been performing even better year on year, and there is a major economic catalyst, for example, that is going to propel this company, that means the company is probably going to increase in value over the next few periods as well. Keeping it simple and investing in what you know and what you understand is a fantastic way to not only get into investing, because it gives you a bit of a competitive edge investing in the industry you may already be involved with, but also it reduces your levels of stress. If you don't understand what you're investing in, you're going to be stressed when there are market fluctuations, when there are fluctuations in the value of the company, or if they release announcements that quite simply you don't understand. So sticking to what you know and keeping it simple is the best way to invest. That wraps up today's video, guys. I'd love to hear your thoughts on Warren Buffett's tips and tricks down in the comment section below. Of course, if you did enjoy today's video, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.